Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, it was clearly a day of breather when it comes to the Bulls. We did, snap out of a winning streak, but, the good part is that we've, recouped most of the losses during the day. And, we managed to end above that 19,400 mark. And if you look at the Nifty Bank index, Yatin, that recovered nearly 500 points from the day's low and ended the day in the green. So you had, when we were talking around midday, I was mentioning that you had the likes of ICICI Bank and Kotak Bank among the top losers on the Nifty, but they managed to stage a comeback and ended the day in the green. And even the broader end of the markets were showing strength. In fact, the Nifty small cap index has gained over 0.5% or thereabouts in today's session. If you look at the advanced decline ratio, it was once again in the ratio of 1:1.
Yeah.
So nothing to really worry about. And there was buying in pharma, energy, metals as well as PSU banks. But realty was one pocket that gave up some steam, given the fact that this sector has seen a fair bit of buying over the last few sessions. Among the Nifty gainers, you had the likes of Sun Pharma, you had BPCL, you had NTPC, Dr. Reddy's, Axis Bank, and on the flip side, you had the likes of Hero Motocorp. Bajaj Finance, of course, was in news on the back of its 8,800 crore rupee QIP. That stock was among the top losers on the Nifty. Divis Lab, Reliance Industries and Adani Ports were the other notable losers. But I think lots of result reactions in the mid-cap space. The likes of Trent and Jyoti, they saw a very good up move in the second half of the session after numbers.
Clearly, and Jyoti Laboratories, that stock, if you remember, last quarter post the results hit the 20% upper circuit, and today also the stock was up nearly 10% in trade. Trent also showing some good growth numbers. In fact, the margin surprise on the positive side, the post which the stock has moved 8.5%. So very strong traction coming in for Trent. Obviously, if you look at the real estate pack, that was the culprit today. Sobha Developers, Godrej Properties, Lodha Developers, all of these stocks down anywhere between 4.5% to 5%. So the real estate stocks witnessing some bit of pressure, and as Nandita was pointing out, a lot of stocks which gave positive result reaction. In fact, Newland Laboratories, that is also one stock which reacted positively to the numbers. If you look at stocks like Atul Auto, stocks like Varroc Engineering, they turned into the black. So a loss-making quarter last year, and this time both Atul Auto as well as companies like Newland Laboratories have shown decent profit growth, which the street was anticipating. Most of the stocks that we saw in terms of sharp reactions today were largely due to better than expected results.
All right, so a lot of result reactions coming in, but let's also talk about some of the stocks that are on our radar this afternoon. Starting with SAIL, Yatin, metals have not had a good run this year. On a YTD basis, even the Nifty Metal Index is down. I think 4% or thereabouts. But SAIL is one particular metal stock that I want to talk about, given the fact that Citi has downgraded the stock to sell, and it has cut the target price to 80 rupees vis-a-vis 110 rupees per share. In fact, it's the domestic steel prices, the concerns over domestic steel prices has in fact prompted the brokerage to downgrade this particular stock. In fact, it says that the lower than average returns is also something that proved to be a headwind when it comes to SAIL. It says that the stock is of course trading at a discount to its peers, but the low single digit return on equity is something that remains a pain point, and going forward the expected returns are also pretty much in the lower end. If you look at the FY25 to FY26 EBITDA estimates, in fact Citi has cut that estimate by 6 to 7%, given the fact that the recent steel and raw material price trends have kind of been on the downside, right? I want to remind our viewers that Citi has also downgraded other steel companies like JSPL and Tata Steel earlier this year. In fact, it has also reduced their target, reduced its target price on these two stocks, and it also maintains that downside risk to steel prices continues or will continue if China prices don't see an uptick, given the fact that the premium to import parity is less than 10% between these two nations. So the stock, of course, stock of SAIL hasn't really done all that well. That's also down somewhere around 4% on a YTD basis, and the outlook, usually or generally on the metal space remains on the downside, and SAIL as well, is one stock where brokerages have turned a little bearish, and which is of course reflecting in the stock prices as well. The stock was down somewhere around 2% in today's session.
Absolutely, and this is something that we'll be watching out for. And in general, we have seen metal stocks remain subdued in the overall scheme of things. Now, what's also remained subdued in trade today is Divis Laboratories. After a 5% up move and a 2% gap up open today, we had the stock which faced intraday pressure. In fact, the stock ended up almost 1.5% lower last time I checked. And the reason why Divis Laboratories was under pressure is because of a Jefferies downgrade. They've cut the target price to 3,510 from a level of 4,300. So almost a very deep 800 rupee price target cut by Jefferies after this downgrade. Now, if you look at the management conference call yesterday, they expect the generics portion of the business to see some competition as well as some margin pressure. However, the company is hopeful that the custom synthesis business will drive growth from here on. But obviously, when it comes to the gross margin performance in second quarter, there was some bit of disappointment. In fact, there could be a sequential pickup in Q3, but given the fact that the valuations are rich, and if you look at the scale up of the company moving ahead, that will require some capex. So obviously, it will put some pressure on the cash generation. They have also stated that moving ahead, the opportunities in the custom synthesis business would be watched out for, because the competition usually builds up in a very short span of time. So whether or not the generics business picks up, whether or not there could be some further business opportunities, question of time. But yes, given the fact that the results of Laurus Laboratories were weak, Divis Laboratories also missed the analyst expectations, so probably there was some selling pressure. Jefferies has cut the FY26 EPS estimates also by 18%. So this is a probable reason why the shares of Divis Laboratories were down in trade, despite the fact that post the results, the stock saw almost a 4-5% rally.
That's correct, Yatin. Divi's Lab, of course, in focus post its earnings that came out yesterday. But yesterday we also saw Bharat Forge report its numbers, and we saw an earnings pop coming in on the stock prices as well. But today we've seen mixed brokerage views coming in on Bharat Forge, because of which, of course, the stock was under pressure. Let me first take you through what the brokerages have to say. Citi has a sell rating, so does CLSA, and both of them have a target of 900 rupees and 987 respectively. Morgan Stanley, however, maintains its overweight rating, target price of 1178. Jefferies, meanwhile, underperformed rating, target price of 850. UBS has buy rating, target price of 1260. So the target price ranging between 850 to 1260, that's the band. But the views are pretty mixed on the stock, and that's because there are concerns over exports and rich valuations, given the fact that the stock has run up quite a bit over the last 6 months. And it's the weakness of performance across its subsidiaries. That's something that has concerned most of the brokerages. Also, the company, in a exclusive chat with CNBC TV18 yesterday, had mentioned that there is an indigenous order for artillery guns, which would add somewhere around 2,000 crore rupees to its defense order book. But the timing of when the order in fact will be reflecting is something, there's no clarity as to when the large defense orders will start reflecting on the books. So that's something that is a matter of concern. But the management also sees some bit of challenges in the wind energy business, and aside of that, they have given a very flattish outlook for exports when it comes to the CV side of the business, right? So that's something that is concerning the brokerages. But on the other side, if you look at the defense vertical, that remains pretty strong, and the management has also said that it aims to improve its profitability in the overseas subsidiary, and it has also given a 25% kind of EBITDA margin aim in the defense vertical when it comes to FY25. So these are some of the positives, but right now it looks like the negatives far outweigh the positives, given the fact that the stock has already run up so much, and the brokerages are also pretty concerned about its valuations, Yatin.
Absolutely, and if you look at the company's performance, I think the domestic market has been decent, but there are still questions about when the defense order comes in, especially the Taut gun, artillery gun order, plus the kind of slowdown in export markets that could be probably concerns in FY25.
Well, so those were some of the stocks on our radar this afternoon. I think with that we've come to the end of this edition of Closing Bell. But if you have any comments, leave them in the comment section below, and of course come back and join in at 8:30 a.m. tomorrow morning when we talk about stocks, when we take up your stock related queries with our technical experts. So if you have any queries, of course, send them in to us with hashtag AskMC. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.